$100 trillion. That's the real number nobody is screaming about, the silent giant sitting on America's books right now. Not next year, not projected, actual debt. And if you think this number is just some abstract government statistic that doesn't affect your life, stop scrolling and listen closely. Because while most Americans were binge-watching shows, scrolling TikTok, and buying coffee, the smartest money in the world started quietly moving billions, even trillions, out of dollar-denominated assets. No press releases, no headlines, just a systematic mathematical exit. And this is happening faster than most realize. Let me show you why you should care, and why your life, your savings, and your future may already be in the crosshairs. America's total debt, public, corporate, household, student loans, auto, medical, is over $100 trillion. That's more than 3 times the nation's annual GDP. Imagine owing 3 times what your family earns in a year, and then imagine interest rates rising, while everyone around you quietly sells the dollars you're holding. That's the reality, and it's not just scary, it's historical. Because every single time in the last 500 years when the dominant global currency reached its breaking point, the collapse followed a precise, predictable 4-stage cycle. First, the ascension phase, Spain, the Dutch Republic, Britain, wealth pouring in, markets booming, armies unmatched, the world at your feet. Second, overextension, government spending spirals, asset bubbles inflate, debt explodes faster than the economy. Third, the silent exodus. Smart money quietly leaves, institutions diversify, foreign investors rotate capital out, while the public sees nothing. Fourth, collapse. The currency fails, inflation spikes, pensions vanish, banks topple, and the middle class gets wiped out. Think about Spain in the 1500s. Gold and silver flooding from the Americas. The real was the global reserve currency, Madrid, the financial center of the world. Yet by the 1550s, the richest families were moving assets to Genoa, Amsterdam, and beyond, reading the numbers the rest of the world ignored. Spain defaulted repeatedly, inflation devoured the middle class, and its empire evaporated. Sound familiar? Fast forward to the Dutch Republic in the 1600s, where the guilder was king, banks financed global trade, and tulip mania inflated a bubble bigger than houses themselves. Major investors quietly moved capital to London before the collapse came in 1695. Then Britain, the empire on which the sun never set, lost its pound's reserve status in the 1970s after decades of debt, war, and quiet capital flight, despite unparalleled global dominance. History is not a story, it's a pattern. And America today shows every indicator of stage 3, the silent exodus. Let's talk numbers. China, once holding over $1 trillion in U.S. treasuries, has quietly reduced its exposure by over $300 billion in the past decade. Japan, the largest foreign holder, has sold $220 billion since 2022. Saudi Arabia, Belgium, Switzerland, France, all quietly trimming U.S. dollar exposure. Even the Federal Reserve is shrinking its balance sheet, letting bonds mature instead of reinvesting. Who's buying U.S. debt now? Mostly the U.S. government itself, through circular financing. That's not strength, that's desperation. Meanwhile, U.S. debt grew from $36 trillion to $38 trillion in less than a year, with annual interest payments surpassing $1 trillion. Imagine paying more in interest than the entire defense budget, more than Medicare, more than entire federal agencies combined, while the smart money quietly steps aside. Corporate debt is $13.5 trillion, household debt $18 trillion, student loans $1.77 trillion, credit card debt $1.1 trillion, auto loans $1.6 trillion, plus hundreds of billions in medical debt. Total financial obligations exceed 370% of GDP. For context, Spain defaulted at 200%, the Dutch Republic collapsed at 250%, Britain lost reserve status at 130%. America isn't just over the edge, it's teetering on a precipice. And yet, everyday citizens hear nothing. They see markets hitting all-time highs, houses appreciating, tech companies booming, and think everything is fine. But this is stage 2 illusions meeting stage 3 reality. The signs are all around you. Are you paying attention? Or will you be asking the same question millions have asked before? How did I not see it coming? The pattern doesn't wait for belief. It doesn't care about narratives or exceptionalism. Spain had the strongest army. The Dutch Republic invented modern finance. Britain ruled the globe. Yet financial mathematics doesn't bend to power or technology. It unfolds. It's inevitable. And today, America is in stage 3. Foreign central banks are selling. Major institutions are restructuring. Portfolios are moving overseas. Allocation to U.S. assets decreasing while international, commodity, and gold positions increase. Wealth that used to circulate in dollars is quietly leaving, unseen, unnoticed, until the cascade begins. So what does this mean for you? First, your wealth in dollars is exposed. If you're holding cash, retirement accounts, or investments entirely in dollar-denominated assets, you're part of the silent exodus's collateral damage. Diversification is not optional. It's survival. Gold, silver, real assets, commodities, anything the government can't print into existence retains value. Second, geographic diversification. Consider assets in Switzerland, Singapore, Norway. Spread political and economic risk. Third, time is short. Stage 3 historically lasts 18-36 months. Based on accelerated foreign selling, we're likely 12-15 months in. Not years, months, every decision counts. Fourth, liquidity matters. Cash loses value, yes, but in a collapse, liquidity gives you options to move when everything else freezes. Fifth, reduce debt. Every interest rate increase now makes debt service exponentially harder. Sixth, invest in skills, knowledge, and networks. Human capital survives collapses when money doesn't. And finally, stay informed. Understand the data, see the pattern, don't wait for headlines to validate what's already happening. This isn't fear-mongering. This is pattern recognition, mathematics, and history repeating. Stage 4 is coming. Are you positioned to survive, to act, to protect what you've built? Or will you be asking, like millions before, how did I not see it coming when all the signs were right there? Think carefully, act strategically, and remember, the people who survive aren't always the wealthiest. They're the most informed, the most agile, and the ones who recognize the pattern before the cascade became inevitable. Now, imagine this. Trillions of dollars that once circulated globally in U.S. assets are quietly vanishing, leaving gaps only the Federal Reserve can temporarily fill. But even the Fed has limits. Printing money, buying back treasuries, inflating asset prices, these are temporary solutions, like bailing water from a sinking ship with a teaspoon. You can print your way out of debt that exceeds the productive capacity of the economy threefold. Yet every day, the narrative persists. Markets are strong, the economy is resilient, everything is fine. And for most people, it feels real, until it isn't. Because history proves that once Stage 3 reaches its tipping point, Stage 4 doesn't announce itself politely. It arrives silently, then suddenly, sweeping away savings, pensions, investments, and livelihoods. Look at Britain in the 1960s. Foreign capital had already started leaving, businesses quietly relocated, families moved assets overseas. For decades, the public saw nothing, and then one day, the pound devalued 14% overnight. Overnight. Imagine waking up and realizing the money you've been saving, the assets you thought were secure, just lost a significant portion of their value while the world silently shifted around you. That is the pattern repeating in real time today. History isn't a theory, it's a blueprint. And the blueprint warns us that when reserve currencies reach unsustainable debt levels, the exodus accelerates, inflation explodes, interest rates spike, and ordinary people bear the brunt. But here's the critical point. You can't stop history, but you can position yourself to survive it, and even prosper when others panic. Diversification is the first step, but not just any diversification. Think in terms of multiple layers: currency diversification, geographical diversification, and asset class diversification. Gold and silver have maintained purchasing power for millennia because you can't print them. Real estate and other tangible assets preserve value when paper wealth collapses. Commodities, food, energy, materials always retain intrinsic worth. And don't overlook alternative global currencies. Swiss francs, Singapore dollars, Norwegian krone. Stable, reliable, less exposed to aggressive monetary expansion. Spread your capital, don't put all your eggs in one basket, because when the dollar stumbles, liquidity dries up faster than anyone expects. Next, consider timing. Stage 3 historically lasts 18 to 36 months. By analyzing patterns in foreign treasury sales, corporate reallocations, and wealth migration, we're likely over a year into the exodus. That means every month counts. Decisions you delay today could become regrets tomorrow. The first movers historically capture opportunity, while laggards watch their wealth evaporate. If you're thinking this is far-fetched, ask yourself why the world's smartest investors, the largest sovereign wealth funds, and major institutions are quietly shifting capital internationally. They see the pattern and they act. Are you going to wait for headlines, or will you anticipate the inevitable? Liquidity is more important than ever. Cash may lose value gradually, but in a crisis, it is your lifeline. It allows you to seize opportunities that others can't, to buy undervalued assets, to relocate if necessary, and to maintain flexibility while others are trapped. Illiquid assets may feel secure in bull markets, but in a sudden contraction, they lock you into losses you can't escape. Balance your portfolio with both liquid and resilient long-term holdings. Reduce debt aggressively, because in rising interest rate environments, leverage becomes a weapon against the borrower, not the lender. Every additional point in interest exponentially increases what you owe. High debt today means high vulnerability tomorrow. Human capital is your ultimate hedge. Skills, relationships, knowledge, They can't be inflated away, seized, or devalued by government policies. Build skills that create value globally, not just locally. Cultivate networks you can rely on when markets and institutions falter. These are assets that survive every financial collapse in history. No currency, no bond, no treasury can outperform the value of capable, adaptable human capital. And finally, stay informed relentlessly. The people who survive these transitions are not the ones who hope for the best. They are the ones who read the signals, understood the patterns, and acted decisively. Examine balance sheets, track treasury holdings, watch for international capital movements, and study monetary trends. This is not speculation. This is pattern recognition grounded in history, mathematics, and data. Stage 4 is approaching. Inflation, asset price corrections, interest rate shocks, these are not possibilities. They are probabilities. How prepared you are today will determine how you emerge tomorrow. Remember, the collapse doesn't care about wealth, influence, or status. It doesn't negotiate or delay. Spain, the Dutch Republic, Britain, all dominant powers, all technologically advanced for their time, all top of the world, and yet all fell when financial reality outpaced their ability to sustain it. America is following the same mathematical trajectory, and whether you act now or later, history will proceed. You can choose to be passive and suffer the consequences, or proactive and position yourself strategically. Takeaways for today: diversify across currencies, geographies, and asset classes. Maintain liquidity and reduce debt. Invest in human capital relentlessly. Observe the patterns. Don't wait for confirmation from the mainstream. And most importantly, don't be blinded by the illusion of normalcy. Stage 4 is coming. The question isn't if, it's when, and when it arrives, will you be ready to survive, to protect, and to capitalize, or will you be asking like millions before, how did I not see it coming? The choice is yours. Comment below with what steps you're taking, where you disagree, or what questions you have. Engage with this conversation because awareness is the first layer of protection. Subscribe and hit the bell because the next video will reveal the 3 asset classes that historically outperformed during Stage 4 collapses. The ones that preserve wealth when currencies crash, when bonds fail, when stocks tank. This is not speculation. It's documented history repeating itself. You have the knowledge now. You see the pattern, you understand the risk, act with courage, clarity, and strategy. Because in the next chapter of financial history, the informed will survive, the prepared will thrive, and the unprepared will face consequences they could have avoided. This is your warning. This is your moment. Stage 4 is coming. Are you ready?